Welcome, everybody, to another episode of Tell Me Everything Fraud Girl Fridays. I'm your host, Danielle Spinelli. This is I think it's 4. Yeah, part 4. This is going to be another part of our series of the Fraud Girl University, talking about all things cargo theft. So if you are new to the industry, if you are starting a brokerage, or you are becoming a carrier sales rep, or whatever the case is, this is kind of your crash course into 5 different areas that I feel like is super important to fully understand. I mean, I guess it's not fully, we're not going into every single bit of it, but just giving you like a brief insight of like, what is it that I'm getting into? Like, I know as myself, whenever I was a new rep hopping on the floor, you didn't really you'd hear like, oh yeah, by the way, be careful for bad actors. But you're like, okay. So understanding the gravity and stuff like that. So be sure to be watching the full 5-part series. If you are a broker, I highly recommend having this part of your training course, making them listen to this like on their drive home, back and forth, or whatever. And so we'll be putting some more materials together for things like that too, as kind of like a little mini Fraud Girl University course, if you will. Anyways, I got Scott Cornell on here today. Today, we're talking about insurance, as confusing as that is for most of us out there, but the insurance world of things, on how to file a claim or how to avoid claims, what type of insurance to have, basically like the whole thing on that. So Scott's amazing. Let's jump in it. Thanks so much for joining me, Scott. I'm super excited for this one because this is one that I don't really know all the information on. I only really know about like insurance vetting. So I'm excited to hear like basically what the breakdown is on insurance and kind of get some clarity, because even myself as a broker, I had no idea. So, and as and everybody knows, with these series of episodes, we're going over cargo theft kind of 101. I'm new to logistics, and this is kind of all the different things that you know. Insurance is definitely a big deal. I did do a series on how to vet an insurance certificate with Jamie Cannon actually a while back. So if anybody wants to reference that, they can. Most people typically nowadays have a platform, but I still think it's important to know like how to have a claim submitted and what information you guys need to know, because that's also part of like the the pre-vetting and the load information. You got to get a bunch of information up front so that it's easier to file a claim later. Anyways, long-winded thing to say.
Yeah.
Let's have you introduce yourself, Scott, and then we'll jump in it.
Yeah. So I'm Scott Cornell. I'm the Chief Risk Officer for SPG Cargo and Logistics. And I'm also currently serving as the Chairman for TAPA Americas.
Perfect. So yeah, this is definitely your, expertise on insurance side. So I think let's just start off with like, what are the different types of insurance? I think that's kind of the basics.
Yeah, well, probably there's a bunch of different kinds, and you could have a conversation about this that would go on for hours, right? So we'll probably narrow it down to a couple to think about, or the ones that are most commonly talked about, right?
Yeah.
So if we're talking from a freight broker perspective, and we're talking about cargo insurance, right? When you get into cargo insurance, first of all, I would say that let's start with what they call contingent cargo insurance, which is what a lot of freight brokers operate under, right?
Right.
Contingent cargo insurance is probably one of the most confusing coverages, at least in my experience through the majority of my career. The coverage that I've had to explain to people the most is how contingent cargo coverage works, right? So contingent cargo coverage is basically like a backstop coverage, right? So in other words, I'm a freight broker. I hire you. You're the trucking company. I look at your insurance. You say you have, let's say, $100,000 in cargo insurance, which is a very common number for a small carrier, right? So you have $100,000 in cargo insurance coverage. I go on that. The contingent coverage is there now let's say you go out and we won't even talk about theft right now. We'll say you have a trailer catches on fire and all the cargo is destroyed and everything like that, right? You have $100,000 in coverage. And let's say your insurance coverage, the trucker insurance covers your coverage, says, nope, the claim is denied because you didn't do proper maintenance on the trailer or something like that, right? The contingent coverage is supposed to kick in at that point. Hey, the claim was denied, right, by the carrier's insurance. Now, it doesn't mean that the freight broker is not going to subrogate against the carrier or try and subrogate against the carrier's insurance. And we can have that discussion if you want to. But what it means is, for my client as a freight broker, I have backup insurance. I hired Spinelli Trucking with the intent that their insurance would cover it, but it didn't. But don't worry, I have contingent coverage, which will back me up. And it will basically pay, it's intended, most contingent coverage is intended to pay what the carrier's insurance would have paid. Most people think, or a lot of people think, contingent coverage is also excess coverage, right? So let's say the load is worth 250, the carrier had 100,000. A lot of people think that, well, the contingent coverage is going to kick in and it's going to cover that 250,000. You can buy that. You can buy insurance that will cover the whole loss, even above what the carrier's insurance would have paid. But most contingent policies originally, as they start out, are intended to replace the coverage that the carrier had. So that
Right.
$100,000 limit, right? That's contingent coverage. It's a backstop type of coverage. And again, you can get contingent coverage that then picks up the excess too and will pay the 250,000 or whatever. But a lot of times, not in every case, but a lot of times that's an added endorsement that you have to get that extra uh, full value coverage on there.
And I know with that, my old company used to do it where like per load, if we would try to find a carrier that had like 250 insurance, and if they didn't have it, then we would buy like a per load policy of what the difference.
The excess insurance. Right.
Yes.
So like
Yeah.
we have a product called Freight Insurance Fast, right? Which is a perfect example of what you're saying, where the carrier or the broker can go on our system and say, the carrier has 100,000. So either the carrier or even the shipper or the freight broker, anybody can go on there and purchase that extra 150,000 to take you to 250. Or let's say, so same scenario you're talking about, regardless of our product or anybody else's product, sometimes you want to hire a carrier because you really like that carrier and they're really dependable for you. But the commodity you're asking them to cover, or the
Yeah.
commodity you're asking them to haul, is not covered under their policy. Let's say it's cell phones and they have an exclusion for electronics or cell phones on their coverage, right? You can
Hmm.
go on a system like that and you can get full coverage for that one. It's called trip transit, basically, for that one load for that carrier because you want to use that carrier, right?
Right.
Or let's say the shipper just wants to have that load fully covered, basically kind of all perils. Even if the carrier is known to have insurance or $100,000 insurance, the shipper can go buy shipper's interest insurance, which is basically becomes first party coverage for that load and basically, you know, covering themselves, right?
So it does
And
become first coverage. So do they don't come after the carrier's insurance first on shipper's
well, your
interest?
hope is that they will, right? You buy that to protect yourself. You don't necessarily
Right.
have to access it, right? I don't have to access, just like you and I, you can get into, let's say you come over our house for a Christmas party, you're backing out of the driveway and you hit, you scrape my car,
Yeah.
right? And we know each other and you go, hey, I don't want to put this on my insurance. I'll pay for it. I'll just pay for it out of pocket.
Right.
It's no different, right? You have the right, you have the ability to just pay for it if you want to without accessing that. So if I'm a shipper and I buy that shipper's interest coverage, but the carrier's coverage is going to stand up and do it, I don't need to access that policy. That's kind of like a backup for me,
Gotcha.
protect myself in the event that nobody else is covering it and I want that covered.
So as a broker, I know almost everybody has contingent. So I feel like you always need contingent, and then depending on the type of shipper or commodity, maybe then also do shipper interest, or would that be totally separate? Like you should get shipper for each shipper you have.
Well, let's get into the other kind of main option, right? So there's
Okay.
what we call kind of dollar one insurance, primary cargo insurance, right? So the thing about a freight broker is sometimes they operate under contracts, sometimes they don't operate under contracts, right?
Right.
So you can go out into the marketplace and you can buy primary cargo insurance coverage, right? Which means so let's concentrate on what's called, basically like a legal liability cargo coverage, right?
Mm-hmm.
And the common kind of coverage grant opening statement is going to be, we will cover what you become legally obligated to pay for direct physical damage as a freight broker, logistics service provider, 3PL, freight forwarder, whatever, right?
Gotcha. Yeah.
So now it's basically saying, okay, we have your legal liability as long as there's direct physical damage, right?
Right.
And so now let's say you have a contract in place with your shipper that basically says, I agree to be legally liable for everything I do for Acme Electronics, right? Now, I'm still going to hire a carrier that has coverage and hope that the carrier's coverage kicks in, right? But now
Right.
I have primary coverage, meaning I have coverage I can access that I don't need to go and contingent on. I don't need it to be backup. I don't need for the carrier's coverage to not respond or deny coverage or not be financially able, which are common terms
Yeah.
to engage contingent coverage, right? I can just access my policy and say, hey, I'm legally liable for this. I signed a contract with Spinelli shippers or Acme shippers, right? And I've agreed to be liable for this. And, there was a truck fire and I need this to get paid right now. And you can basically access that as primary coverage. Now you're going to pay a lot more for that, right? Because you're stepping right up to the plate and you're initially paying. Now you can access that and have it paid, and then subrogate against the carrier or that insurance company that you've bought that policy from can go and subrogate against the carrier on your behalf or on their behalf to basically make themselves whole on the claim that they paid out, things like that. But you can go out and you can buy that primary legally based coverage as a freight broker so that you don't have to worry about being in a contingent position. You can just cover it up front. And a lot of that would happen for theft. So when we talk about theft, if you go out and you hire somebody that you think is a legitimate carrier, and as you and I have seen a million times, they send you a COI and it's either bogus or the insurance was canceled for non-payment or,
Hmm.
you name it, they canceled it right after they booked a load with you, right? They canceled the coverage and all this other stuff that you and I have seen a million times, right? The contingent coverage there quite often is not going to kick in because you didn't have a valid trucking company that you hired,
Mm,
they weren't legit and everything like that. So that primary coverage can kick in quite often in a theft scenario and pick up that theft without having to worry about you're basically paying for the mistake. In other words, right? The
right.
freight broker accidentally hired a bad guy that they didn't know, and there's no insurance that really exists and all this other stuff. So you're going to step in and pick up that coverage primary because that's what you've paid for and you've
Right.
bought that coverage.
Interesting. Yeah, I think that's where, like you were just mentioning with the contingent thing. I think that's like earlier before we hopped on. I was like, so explain whenever cargo claims don't get paid out. And like you're like, well, that's not always the case. But that I guess is a scenario that I hear about a lot is where they actually didn't have anything and then it like doesn't get paid out and then people pay out of pocket. And
Yeah.
it does seem like it's getting better, but for a long time brokers would just fork out the money anyways and not have to deal with any type of insurance, which of course happens. But it's nice to know, I guess, that there are options because as we all know, shippers want their money right away and they get real, you don't want to lose a customer and there's like this whole thing. So I think having like a primary one, shipper interest or whatever, any of those, so that way you can depends on your shipper. Like every shipper is a little different. So having that conversation I think is crucial.
So let me make this statement first. We're using some specific scenarios to
Yeah.
give examples, right? But it's critically important that you look at the wording on any form because it's like flavors of ice cream. There's a million of them, right? So you literally have to make sure that these things that we're talking about in these scenarios are covered in that wording. I've seen contingent forms, there are some contingent forms that just exclude electronics and they exclude, you really have to what's being excluded, what's being covered, you know, if something is even mentioned, not mentioned, there's a whole bunch of coverage implications depending on the wording. So you really, if you're a freight broker, you really have to have a good insurance agent,
Yeah.
right? You need to hire an agent that really understands coverage. A lot of times people will hire an agent because they like the agent. There's a great relationship there. Oh, I get along with this person really well. That's
Yeah.
great. But what if they're not really good at the coverage part?
Right.
Right. And they misunderstand the coverage. Or, I've seen in the past, the owner of a brokerage or even a trucking company has a relationship with somebody in town who's an insurance agent. And that insurance agent does, you name it, like five other types of insurance, but they don't do any transportation.
Right.
Right.
It just
They've
happens
never
to
had
go
a
with.
transportation client. But because you and I know each other and we're in the same town and we see each other or we're friends or we have friends in common or relatives in common or whatever, I hire you and you go out and you give me a cargo policy and you really have no experience
Right.
with that cargo policy or anything like that. Now, that doesn't mean that that agent can't figure it out and work it out. But my recommendation would always be to go to an insurance agency that has some transportation specialization or they have
Mhm.
producers in their agency that specialize in transportation and they really know the coverage and they really understand the coverage, right? And you want an agent that's going to be come to you and say, yes, this option might be more expensive than this option, but this option's really not going to give you the coverage that you need based on what you do. So my
Right.
recommendation would be this. Now, the insured can ultimately decide, no, We're price driven and we want to go and buy the cheaper policy. But you want an agent that at least educated you at that point of purchase and said,
Right.
listen, I get it. I get the difference in price, but this is a lot better coverage. Yeah, you got to pay for it, but it's a lot better coverage. And here's why. So you want an agent that can really do that, or you want an agent that can look at a form and kind of dig through it and say, hey, there's an awful lot of things excluded in here. There's commodities excluded in here. Even if you don't haul these, an agent who says, Danielle, I know you don't move electronics right now, and that's fine. So you don't have to worry about the fact that it's excluded on this contingent policy, but you need to know that in case you bring in a client that wants you to move electronics, then we have to go back and we have to purchase that coverage back, either through an endorsement or maybe we have to go get a different policy from a different insurance carrier, something like that. So you want to have an agent that's really going to educate you on that, because we're talking about some specific scenario examples here, but there's a
Right.
ton of different policies and a ton of different wording, and you really have to make sure that you understand it when you're purchasing it.
Well, and even two things to bring up. One thing is like if let's say it's excluding electronics. I know we had a situation at my brokerage where they happened at one time needing to move like they're changing warehouses from here to here. So technically had electronics on there because they were just moving their facility around.
Right.
It's not something you would haul normally, but it happens. So like you
Right.
said, knowing that and then fixing that. And then also, I think what's super important to bring up too, and I would love for you to jump in on this, is the difference between having like a shipper broker contract. A lot of times they, like you said, they either don't have a contract or it is a shipper carrier contract. And that leads brokers to be more, held liable for things if they have that type of contract versus the broker contract versus really no contract, right?
Well, usually that. So let me go back to your first
Yeah.
comment about that one time they had to move electronics or whatever. That goes back to that. You can go and purchase that one-time coverage, right? So if
Right.
again, if you have an agent or you're pretty savvy, like a lot of freight brokers that I deal with that are my clients, they have somebody in-house that's really savvy on coverage,
Yeah.
and they have an agent that's really savvy on coverage. So the two of them are really working together as a good team, right? And they're really understanding what's covered and what's not and where they need coverage. So in a scenario like that, they know, hey, we're not going to move electronics, but there's one time we do, so we're going to go buy, a trip transit or shipper's interest policy or something like that, just for this one load.
Right.
So you can do that too. Getting to remind me, what was the second scenario again?
Contracts. So shipper
Contract.
broker contracts or shipper carrier
Yeah,
contracts.
so I always kind of say the transportation industry kind of runs downhill, right? The shippers designate terms to the brokers in most cases, and the brokers designate terms to the carriers, right?
Hmm.
The broker carrier agreement is going to put most of the onus on the carrier, right? Carriers, if there's no contract in place, the carrier's operating under Carmack. Right?
Yeah.
You're familiar with Carmack, I'm sure,
Yes,
from
I
your
am.
days. Yeah.
Yep.
So without a contract in place, the carrier's operating under Carmack, which is strict liability, right? With, some exclusions like act of God, misloading of the shipper, and inherent vice are the most common ones talked about, right? Just for the audience, when people ask, what is inherent vice? It's like the best example I always give is metal rusts, right?
Gotcha.
Metal
Yeah.
rust. So you can't tell the carrier that they're responsible for the metal that rusted when everybody knows metal rusts. So Carmack is kind of that strict liability. Now, the broker carrier contract is meant quite often to waive Carmack, right? So one of the first things you look for in that contract is there a spot in that contract where it waives Carmack? So now you're not operating under that strict liability. You're operating under specific contractual terms, which are often broader, right?
Hmm.
And more onus to the carrier on what they're responsible for, right? Can be things like broken seal, stuff like that. If you want to get, I had a very long discussion with a coworker this morning, great discussion about broken seal coverage, which is, something that a lot of people don't understand because of the FSMA regulations and the Food, Drug, and Cosmetic Act and all that kind of stuff, right? So you can have a contract, let's say, with a big shipper of, you name it, food, some kind of food product, right? That
Yeah.
says you as the carrier agree to be legally liable for a broken seal, irregardless of whether there's any contamination of the food or anything like that. You're basically just saying if that seal's broken, Mr. and Mrs.
Right.
Trucker, you're picking up that loss, right? And so those contracts that we're talking about can often be put more onus on the carrier and what they're liable for than a regular, just moving under Carmen.
And so I know, I guess probably the biggest thing too to talk about is exclusion. But like it dep a lot of commodities had different exclusions, and so I think having that relationship with your agent where you're like, "Hey, this is what type of commodity I haul, and is this a common exclusion on a carrier's policy?" But honestly, like, I've seen some crazy things too, like, the other day I saw one that said, like, cheese. I'm like, "I didn't know cheese would ever be an exclusion." You wouldn't think that,
I
right?
would say
So,
that's unusual for sure, right? Like
super weird.
specifically cheese?
Specifically cheese, yeah. It's like,
Yeah.
"What? That doesn't make any sense."
Was that in Wisconsin? What's it?
Right? It
Is
was
there
very weird.
yeah.
And they happen to haul cheese. So sometimes you're like, if you have this weird one on there, like, and then you happen to haul it, what's going on? But anyways, and then sometimes you see where it says if a theft happens by an employee that it's not covered. To me,
Right,
that's like
very common,
super.
very
It's
common.
like shady. Like I'm like, how do I know? Like, what if this guy, like you and me have talked about the Trojan driver? Like, what if it is a bad driver?
Yep.
Then they just don't pay it. Like that's crazy. If
Yeah,
I was a broker, do you see that? Would that be alarming?
no, so employee dishonesty is a very common exclusion in the industry, right? Very
Yeah.
common. Now, there's different versions of it, right? There's a version out there in the industry that only excludes employee dishonesty if it's the principals or executives of the company, right?
Yeah.
Which is so that gives you
That makes
broader
sense.
coverage. So if
Yeah.
the average employee steals something, you're going to be covered because it's only talking about owners, principals, executives type of thing,
Mhm.
right? And so that's a bit broader coverage, but it is extremely common to have an employee dishonesty coverage gap or an exclusion for employee dishonesty in general. In most cases, you can buy that back,
Okay,
right?
interesting.
But here's the thing, this kind of gets to another conversation about risk mitigation. The more savvy the insurance company, the more sophisticated the insurance company that offers more coverage, broader coverage, is going to, exclude very few things. They want an insured client, that is willing to risk mitigate with them, right?
Mhm.
So when you think about employee dishonesty, you go, well, why wouldn't they pick that up? Well, there's some expectation that you're doing background checks on your employees, that you're
Gotcha.
monitoring the activities of your employees, that you're making good decisions in hiring. You're not just hiring random people with, no idea who you're hiring and putting in possession. You and I, you've heard me joke about this. I say, if anybody had to move $10 million, what would they do?
Yeah. Check everything.
They'd hire an
Yeah.
armored car company.
Right.
Right? So you'd
Right.
have armed guards and you'd have an armored vehicle and everything else.
Yeah,
But
they
if you
would
have a
check
$10
everything
million
and
server rack, you go, "Hey, Danielle, you wanna haul this for us? Go
hey, you got
ahead."
authority.
No,
Yeah.
no locks, no, we don't care about any of that. Just get it there, stuff like that,
Yeah.
right? So there's an expectation to some extent where you're like, okay, at least tell us that you know that your employee is not going to steal that $10 million server rack because you've done a good job vetting your employee and that kind of thing, right? So this gets into, risk mitigation. Like we're really
Yeah.
big on long-term partnerships. Like we take pride in the fact that we want to have our client relationships for like 10 or 20 years. Well, how do you do that? You do that by learning your client's business,
Yeah.
helping them mitigate risk. I mean, what I spend a lot of time doing is working with my clients, teaching them how not to have theft in the first place. I'll
Right.
evaluate their systems and their process and their procedures, and I'll make recommendations, and I'll go there and train their employees and stuff like that. But what we're looking at when we're looking at that client for the first time, when we're underwriting them for the first time, is do they even have, even if I think I'm going to have to make changes to their process down the road, do they even have a process?
Right.
Do they even have a ground level that we're starting on where we go, hey, this client has a mentality for wanting to prevent cargo theft. If we use cargo theft as the example, this
Mhm.
client has a great mentality for wanting to prevent cargo theft. We can work with them. We can teach them more advanced methods. We can introduce them to vendors that we're familiar with. We can help them review their contracts with their shippers. We have an in-house legal guy, Justin Olson, who takes a look at, what are they signing up for in the contracts, something like that. So your initial question on employee dishonesty kind of gets to that bigger topic of, are we working with somebody who's taking the time to want to mitigate risk on their side? Because that makes for a better client and a better insured client relationship, right?
Mhm.
Now, that doesn't mean that somebody who's not doing those things doesn't want to do them and won't embrace those things when you bring them to the table. We see that all the time. But if you have a mentality of, well, that's why I buy insurance and whatever happens, happens,
Yeah.
you can have that. You can go and get insurance to cover that, but your rates may be higher if you're having a bunch of losses and your mentality is, well, that's why I pay insurance, right? It
Right.
is. In essence, it truly is why you pay your insurance. You pay your insurance to cover losses that you're going to have.
Right.
But if you have 3, 4, 5 losses in a year, expect your rates to go up. Your agent may have to go someplace else to get your insurance. You may have higher deductibles. You may have lower coverage limits. You may have all
Hmm.
sorts of restrictions. And then you may get into things like, we're not going to cover employee dishonesty because you've had 3 employee thefts in the past, things
Yeah.
like that.
So on a carrier level though, I mean, like it's hard because right now we're at a point in the industry where it's like I don't trust anybody until I do they meet all the things and the load delivers a bunch of times and I know the guy I ate dinner or whatever. Like the trust level doesn't happen.
It's
So
terrible,
whenever
right?
you
It's awful that we're operating in an environment like that right now, but that's what
yeah,
the bad guys have done. To be clear, that's not
right.
because of anything the average
Right.
trucker or a good person has done. It's because of what the bad guys are doing.
For sure. And
Yeah.
anything we look at with a good guy, a lot of times, especially if you don't know how to properly vet a carrier, you're looking at it like, oh, this guy's bad or whatever. And I think that's one of those things that for even me myself, whenever I'm looking at an insurance certificate and it says that, I'm like, why would you even have it say that? So if I see that and that's my mentality of like, I don't trust you yet, would you ask them the questions like, hey, you already have this on there, or you have like a, employee, whatever on exclusion? Would you ask like, how do you vet your employees, or what are some things that you would ask them to further vet if you see that?
Yeah, I think, this becomes that whole broker liability,
Yeah.
vicarious liability. Do you want to get too deep? That's what's coming out from SCOTUS. We'll see how SCOTUS rules on this, right?
Right.
I would tell you that, this kind of goes back to my example about there's a million different policies out there that you can get and coverage wording. There's a million different ways that freight brokers deal with that.
Right.
Some freight brokers ask those questions, some do not. Some feel comfortable like, hey, just because I ask a carrier if they do background checks and everything like that doesn't mean I'm vetting the driver. It
Right.
means I'm vetting the carrier and what their process is around their hiring,
Right.
right? So it's not really that uncommon, for freight brokers to ask simple questions like that. But how far down the rabbit hole do you go on that?
Yeah, exactly.
And
That's what
that's where that whole vicarious liability concern and fear comes into play. If I'm being honest, I would go to Justin for that in a heartbeat. I'm not a legal expert on that, right?
right.
So for me, being a theft guy and you being who you are, being,
Yeah,
diving into the theft world over the first couple of years, you and I want to ask 25 questions on that.
totally.
And a lot of freight brokers are like, I'm not going to ask 25. I'm not going to go that far down the rabbit hole on that. So that differs by every client relationship and every broker carrier relationship.
Okay, another topic I want to talk about is scheduled auto. Because sometimes they'll all of a sudden a random truck, or we are dealing, chameleon carriers or a day lease or whatever we deal with. There's all these weird gray areas that we deal with. Now, from my understanding, let's say if it's like a recently purchased truck or like that day lease thing, there's technically that period of
Usually a
time.
window. Usually a
Yeah.
window.
Yeah, there's a window where you can even if they're not listed, they would still be under coverage because of blah, blah, blah. I don't know what it's
Yeah.
called, but yeah. So there's so many claims that I know of that do get denied because the scheduled auto wasn't on there. Is this something that like truly should be something you check on every single call? Because they can change that at will at any moment and not tell anybody. It's not like the same as, coverage being completely canceled. What's your advice on that? Or how can you mitigate your risk with those type of claims?
Well, from a carrier, let's start from the carrier's perspective, right?
Yeah.
From a carrier's perspective, I would say just be very eyes wide open that that's the kind of coverage that you have, right? So there's certainly tiers of coverage out there, right?
Hmm.
You can go for the, let's say the Cadillac version, right? Which there's probably 3 or 4 carriers at that very top that offer super broad coverage. It's based on your legal liability as a trucking company or a carrier, right? And it goes back to that broad coverage statement that I said in the beginning. The same thing
Yeah.
can be said for a carrier, all that. So then you're getting into as long as it's direct physical damage and you're contractually liable for it, or you're legally liable for it, I should say, and it's not specifically excluded, you're probably going to be in a good place. As you start to go down the tiers, you go from a legal liability type coverage, which is very broad, as we meant, to a named perils type
Right.
of coverage, which is, it's exactly what it sounds like. Here's what you're covered for. Here's what you're not covered for. You really got to read through the wording carefully and think about how you operate as a carrier, what you haul, who you haul for, where you haul. Make sure that all that in that named peril type coverage is there and it's not specifically excluded, etc. And then you get down to these really tight coverage forms, right? Which they're usually less expensive,
Hmm.
right? Again, and that's not pointing a negative at those carriers or whatever, that's what they're selling. They're selling you have much tighter coverage, you know, and you're
Right.
going to get probably a cheaper rate or whatever. So when you get into something like scheduled auto or even scheduled drivers, right?
Right.
You as a carrier, you need to be really aware. Some carriers will just go, "Oh, that's easy. I can do that." But you really have to think about, do I really have an efficient back room? What's my turnover like? How often are we changing equipment? All that kind of stuff. How often are we hiring a, subcontractor
Right.
that wouldn't be on there? And are we going to vet that they have their own coverage, et cetera, et cetera? So you have to get into a ton of stuff with that. From a freight broker's perspective, when you're looking at a carrier, you definitely want to know that that's the kind of coverage they have, right? And you definitely want to make sure when you say, okay, we're hiring ABC Trucking, and let's say they have 10 power units, right? And 10 drivers, you want to make sure, hey, when you tell me Danielle is going to be the assigned driver, I want to make sure, I want to confirm with you. I want you to confirm that that is on your scheduled. Danielle's on there
Right.
and her equipment is on there. And, some policies, they won't require that Danielle is on there. They'll just require the equipment to be on there, but some will require both or one or the other. And
Yeah.
you want to confirm that that's there because, like you said, I mean, we know the turnover in the trucking industry is brutal, right? And
Yeah.
so are you keeping up with that? And then also, what is your window on that? Like you said, is it a 10-day window? Is it a 30-day window? Is it a 60-day window? 60-day window, I would tell you would be rare.
Yeah.
30-day probably more common, but I've seen 10-day.
Oh, really? So it depends on the policy then more than, or is it the state that you're in? Because I
Sure.
no.
Depends on the now there are state regulations around insurance that we'd really going down a rabbit
Yeah,
hole on
right.
that,
I
right?
know.
But for the most part, I would say it's going to be depend on the insurance company. You're best to look at it that way.
So let's specifically talk cargo theft then. So if I'm dealing with a cargo, or I'm trying to prevent cargo theft, I'm talking to a carrier that has any auto policy. I'm honestly like, thank God, scheduled auto policy. Then I'm like, oh Lord. And so I got to get all this information. I got to verify. Now sometimes they'd say that this guy's going to pick it up, and that's on the policy that somebody else shows up. And I know this is kind of getting in an nitty gritty, but I think this is the part that's super like confusing. And what do I do? So as far as that, taking that scenario, then as far as vetting it and the initial, what do I do in the beginning? Because like kind of said, you need information in the beginning of your vetting and before you book them, before, because usually after a claim happens, they go ghost and you don't know what's going on. So what do you suggest for that part?
Well, I guess I'm not 100% sure what you're asking me at this point.
Okay.
Are you asking? You named like
I'm
five different
sorry.
things,
I'm
right?
sorry.
So are we talking about coverage for theft? Are we talking about vetting? Are we talking about what are we talking about?
So I guess meaning mainly like if they have scheduled auto, do
Mhm.
I like verify? Is it super crucial for me to verify who that truck is that's showing up, that VIN, calling that insurance company, verifying the VIN? Like, are those the proper steps to kind of ensure you're covered?
I think it's important for you to make sure that, if it's scheduled auto, that the truck and the equipment being sent are scheduled on there, right?
Yeah.
Or they're within that window at very least, right? So, even if your carrier said, well, yeah, it's a new truck, we bought it yesterday, but we have 30 days to put it on the policy, you're good. Okay. I mean, if you have that trust, you
Yeah.
know, like you said, right?
I'd be like, please show me the bill of sale and show me
That's
the
right.
policy.
Right.
Yeah.
So I would say, yes, it's important to make sure, that that you can verify that that's going to be covered under the policy.
Yeah.
Right.
Okay.
And
Good.
there's new verification tools coming out. Right. I don't know how you are about naming tools and stuff or naming companies and stuff like that, but there are companies coming out with pickup verification tools that will verify that, yeah, this is the right driver with the right equipment and that equipment is covered.
Yeah. That's crucial. I mean, at the end of the day, that's really what you need to know, but it's also getting shippers to do it, which is getting better. I know, but still.
Yeah.
Cool. Well, that all helped me a lot understand kind of, I guess, dumbing down insurance as best you can and realizing where your risk is at, how to mitigate it by, doing certain steps ahead of time. So I appreciate your time so much.
Well, can we talk before we go? Can
Yeah,
we just
for
talk
sure.
about theft coverage in general?
Yes,
Right.
please.
So I think, one of the things we talked about before this episode that I don't want to forget to talk about is, when theft exploded in, that 21 to 24 window, right? The insurance industry responded by A, usually digging deeper into what are you doing as a freight broker to vet your carriers. And if you work with an insurance company that has somebody in-house, or you work with an insurance agent that has somebody in-house, like myself or some others, right, that understand cargo theft, what I spend a lot of my time doing is talking to a potential client and listening to what it is that they do so that I can help the underwriting side evaluate that risk level.
Mm-hmm.
Right? So it's important to be able to articulate very well what you do to prevent theft and prevent losses, right?
Right.
But in general, the other thing that the insurance industry did is a lot of them bifurcated theft coverage, meaning, yeah, straight theft is covered, strategic theft may not
Right.
be covered, or a specific type of strategic theft might not be covered, or it could be a per occurrence limit with an annual aggregate, right? So you have to really, again, this goes back to you have to have a really savvy agent, right?
Right.
You have to you have to have an agent who can walk you through that coverage and make sure that you go out and get the right coverage for those concerns that you have around cargo theft. And if you are getting a per occurrence limit with an annual aggregate, which is very common right
Yeah.
now, very common, right? Is it enough? Can you buy more? Right? Those types of things, right? Can you articulate your theft prevention and your carrier vetting process to such a level, that, hey, you know, we'll give this carrier a higher per occurrence or a higher annual aggregate because we think that they're better at vetting carriers than most. It can also impact your deductible, right? They can
Mm-hmm.
say, hey, we want you to have more skin in the game. And that's very common since theft exploded is, hey, they drive behavior, the insurance industry will drive behavior to a freight broker by saying, you're going to have a little more skin in the game. You're going to have a higher deductible because we want you incentivized to be doing the right thing and vetting the carriers correctly and everything like that, right? So we're in this together,
Yeah.
right? And we'll help you. So in cases like that, that's really where it's important to go out and find an insurance company that wants to partner with you, can bring resources to the table. Can they teach you how to vet the carriers better? Can they introduce you to vendors? Can they teach you a process? Do they have a cargo theft response? If you do have a theft,
Right.
is there somebody there to help me in the middle of the night or in, on a weekend or something like that when there's a cargo insurance company? So all those things you want to take into effect. But yeah, there it's not uncommon now for strategic theft to be excluded or limited or bifurcated. So you really have to understand that. And the last thing that I would add into that is making sure that the coverage that you're getting, right, is going to not only pick up the theft, but it's going to pick up the theft for the specific commodities that you're hauling, because sometimes they'll include theft coverage, but they're excluding certain commodities for
Interesting.
theft only.
Huh.
So you could be
Yeah.
covered if you have a trailer fire, but if you have a theft, no,
Interesting.
right? And the last thing I would say is cyber coverage is kind of the Wild West in the insurance industry right now, right? The insurance industry hasn't made up its mind. Is a phishing email or a social engineering email considered a hack?
Yeah.
Or is it a true hack? What we all picture from the movies, or somebody goes in, literally hacks into the system through some kind of a backdoor or weakness that you find, right? So most people, I have a couple of people in the industry that do cargo theft, them all, that, they started off kind of in that IT or in that computer world, and they would tell you that a phishing or a social engineering email is more of a penetration than it is
Mm-hmm.
a cyber breach. Right. So most cargo policies, if they cover theft, are going to cover those. Right.
Yeah. That is a
But
gray
there,
area though.
but you have to find out specifically, does my insurance company consider that as a cyber, a hack? If my insurance company considers that a hack, you might need a cyber policy to cover that. Or if
Interesting.
my insurance company just considers that, no, it's a penetration and it's cargo theft and we cover that under cargo theft. So that's questions. That's a very important question I think your listeners need to pay attention to right now.
Right.
A, do I need a separate cyber policy for X, Y, and Z, or am I covered under my cargo policy for that?
Because really, that's the biggest way that people are getting hit. It's with strategic, I think, anyways, is it all results originally from something
It's up
cyber that
there. I think
happened.
it's up there in that top three right now. I think,
Yeah.
between double brokering, the MC number purchase, and the phishing and social engineering emails, they're kind of neck and neck, the top three right now. I would agree.
Right. Yeah. I mean, it's the easiest thing for them to do. They don't really have any skin in the game because they're not putting money out. It's just an easy phishing attempt. And It was interesting whenever I met with the FBI, they were saying that the RMMs or whatever, whenever they live inside of a server and then they'll post something and then fish more stuff out, and it just is like this repeated cycle of all these things. But
Yeah.
yeah, that's interesting because I would think cyber related stuff would be like your bank account gets hacked and then something gets transferred over, but not considered cargo theft because that is a physical taking of something.
Right.
That's interesting. Yeah, I guess that would be
Yeah.
depends on your
And so,
policy
yeah,
and
and I would agree, but it doesn't mean every insurance company sees it
yeah,
the same way. So again, it comes back to you really have to have a knowledgeable agent, and you really need to. Here's what I would recommend. If I give you one top recommendation to take away from this, I don't want to just talk to my agent. I want to talk to the insurance company that I'm looking at, right? If I own a freight brokerage and I'm going out to buy insurance tomorrow, yes, I want my insurance agent to tell me, okay, I've narrowed it down to these three companies, right?
right,
Then I personally, with my agent, want to get on a phone call with each of those three companies. And I want to hear those companies explain their coverage to me. I don't want to hear my agents, again, I'm not saying you don't value your agent's
right,
interpretation of it, but I want to hear how you, Acme Insurance, explain your coverage to me and to my agent.
right.
Right. And then also from them, how are you going to partner with me? How are you going to help me? How, are we going to risk mitigate together? What services do you offer me? Things like that. Right. But I want to have a direct conversation with the insurance company, not just with my agent. And that's not expressing any mistrust for your agent. It's because you want to hear it directly from the horse's mouth, so to speak. This is what we cover. This is what we don't.
Well, and honestly, agents deal with so many different things. They may mess up and forget to tell you one thing, or you know what I mean, or read this wrong, or whatever. It's because it is a lot of it's like reading. So my old company would make it where we would have to go get the policies for some stuff. Whenever the carrier seemed like whatever, we'd have to actually go get the full policy and read it. I'm not an insurance anybody, so I didn't know what I was even looking at. I think now I would throw that in ChatGPT and ask them to help me, but yeah, I think that that's important to know though, is hearing it from the horse's mouth. And then I think the biggest thing, like you just mentioned, though, is what resources are out there because it does change all the time. And how else are you going to get help if something does happen?
Yeah. 100%. They should bring something more to the table for you than just your policy form.
Right.
You
Yeah.
know,
And
other things to look at. Do they have in-house claim service or are they using a TPA, right? I always prefer an in-house claim, right? I want somebody who is right there at the insurance company that I'm hiring, that they have their own in-house,
yeah.
right? I would always prefer that over a TPA. And I'm not saying that there aren't some good TPAs out there, but I just think that, if I'm buying insurance from Spinelli Insurance, I want Spinelli to handle the claim.
Yeah. Exactly.
And so I like that in-house claim. Are they bringing a cargo theft aspect, a cargo theft response? Are they bringing cargo theft mitigation? Do they have educational stuff? Do they have like a risk control type of website that you can go into that has white papers for you or resources or documents or even how-to videos or instructional videos or recommends different resources out in the industry for you, that type of thing? Are they constantly researching? I spend a lot of time researching vendors for my clients,
Yeah. Me
right?
too.
Because my
Yeah.
vendor will come to me and go, if I have a trucking company, they'll get, not my vendor, my client will come to me and go, I need tracking. There's 100 tracking companies out there. Which one do I do? Here's three that I've looked at
Right.
that I really like and that I've had good luck with that, you can take a look with. It's not mandatory that they use them, but I've narrowed it down from 100 that they're seeing all over the web and at every show and everything like that to here's three good ones that have performed really well.
Yeah.
Same thing
Yeah.
with vetting platforms. When you look at the vetting platforms that are out there, I talk to my clients all the time about, listen, this is a vetting platform. This is an onboarding platform. This is what are you trying to accomplish?
Uh
And
huh.
I'll help my client walk through that. So are they giving you those types of things? Not just a policy. Hey, I sent my check and you sent me a policy. What else are they doing to help you on a regular basis? That's
Yeah.
important.
And I definitely think it's interesting being like on the vendor side of things, getting to know other vendors. Me
Mhm.
being like in partnerships, for instance, like you really do see behind the curtain of like how many customers do have issues with them, or how many people have like great success. Like to me, I think you need onboarding and another vetting platform, and maybe another
Agreed.
vetting platform. I think
Right.
you can't have enough. So, is there one that's out there that you can stack easily and actually have a process flow that works?
Yeah. Well, we have like, you talk about TAPA.
Yeah.
We have, I think, um, when I first joined TAPA, it was myself and I think one other person from the insurance industry that were members of TAPA.
Uh,
Now we have probably a dozen insurance companies, you know, that are members of TAPA. That tells me that those insurance companies are trying to learn what the problem is for their client, right?
Right.
And their agency partners, but they're probably also like I encourage my clients to join TAPA all the time,
Right.
especially freight brokers. Hey, go get the freight broker security requirements. Use those for your foundation, And we look at our clients different when they do those types of things.
Right.
Right? When we're evaluating the client that goes out and they get FBSR certified, or at least they use those things, they participate in organizations like TAPA or JJ's, the Southwest Transportation Security Council or the Northeast one or the Midwest one, right? We look at our clients a little bit differently in that way. We look at them
Totally.
as somebody who's being more proactive, getting involved in the industry. But I would tell you there's probably about a dozen insurance companies right now that are members of TAPA, right? And so they're out there either trying to gain knowledge or bring resources to their clients, and that's a difference maker.
Totally. Yeah. I mean, if to me, if your vendor in any way, shape, or form isn't staying up to the know of things, Lord help you.
Right.
Yeah.
Right.
Okay. Anything else that I missed that we need to talk about?
No, I think we covered a lot. And insurances can be confusing.
Yeah.
Again, we took some very small samples and some very small uh, examples that don't apply to everything. And there's a million different coverages out there that you can get. So you just need to really educate yourself. Make sure you have a good agent. Make sure you do the research.
Yeah. Do the research. Yeah. And I think even that, like not being an agent yourself, you're kind of like, "Ugh," but ask around, talk around. I think agents do a good job, or insurance companies, anyways, do a good job at like educating you so that you can, when you do shop around, you know what you're looking for at least.
I think you just said something important right there is ask around, right? Like,
Yeah.
listen, you and I know, like, we were just at the TIA.
Hmm.
All these freight brokers, they all know each other. All the people that work at these different, they either worked together at a past freight broker or they
Yeah.
grew up together at a different freight broker. And so ask your peers, who are you insured with? Who's your insurance agency, right? Do you have a
Yeah.
good agent? Do you think your agent really understands this stuff?
Right.
Anything like that. Ask. Definitely. That's an important point that you made. Ask around.
Right. I think that goes with anything you get tech wise or whatever, because
Yeah.
there's so many, even at TIA, there's so many like ones you're like, who's this? And will they be here next year?
Yeah.
You never know. Well, cool. Well, thanks so much for joining me and being part of the series. I really appreciate it.
No, this has been
And
really fun. I appreciate you bringing me on. I know for a long time we were trying to do this. I'm happy that we've been able to do it. So
I know I'm super stoked to do this little mini series because it's not available out to the masses like that. Like, and there's so much to go over. So yeah, cool.
it's fun stuff. You're doing a good job.
Thanks. All right.
Thanks.
Bye, everybody.